If you had $10,000 today, would you put it into real estate or into stocks? That's the million-dollar question in 2025. And the answer could change your financial future. Some say real estate is the safest bet, offering cash flow and stability. Others argue that stocks deliver faster growth and are easier to manage. But here's the truth. Both can build wealth, both come with risks, and both can make you financially free if you know how to use them. In this video, we'll break down the 10 key differences between real estate and stocks, compare their pros and cons, and help you decide which investment is right for you this year. Stick around, because the last point might surprise you. It's the strategy most millionaires quietly use. 1. Accessibility. Who can start? One of the biggest differences between real estate and stocks is accessibility. With stocks, anyone can start today. You can download an investing app, fund your account with as little as $10, and instantly own a piece of companies like Tesla, Apple, or Amazon. It's fast, simple, and beginner-friendly. Real estate, on the other hand, often requires a much larger upfront cost. Down payments, closing costs, property inspections, and ongoing maintenance add up quickly. For most people, this makes real estate harder to enter. However, in 2025, fractional investing platforms like Fundrise, Arrived Homes, and Realty Mogul are changing the game by allowing everyday investors to buy small shares of properties with just a few $100s. 2. Liquidity. How fast can you get cash? Liquidity simply means how quickly you can turn your investment into cash. With stocks, it's almost instant. You can sell your shares within seconds and withdraw money in a few days. This flexibility is especially useful during emergencies or when new opportunities pop up. Real estate is much slower. Selling a house can take weeks, months, or even longer, depending on the market. You'll also face agent fees, taxes, and legal paperwork. Some fractional real estate platforms now offer faster liquidity options, but overall, property remains a long-term, less flexible investment. If speed matters to you, stocks clearly take the lead. 3. Risk. Market volatility versus property stability. Both real estate and stocks come with risk, but the type of risk is different. Stocks are highly volatile. You might wake up to see your portfolio up 5% or down 10% overnight. This can be stressful for beginners. Real estate, on the other hand, tends to move more slowly. Property values rise or fall over months and years, not hours. Even during downturns, people still need housing, which adds stability. In 2025, with inflation, high interest rates, and global uncertainty, real estate remains a hedge against extreme volatility, while stocks remain more sensitive to daily economic news. 4. Returns. Which grows faster? On paper, stocks often win. Historically, the S&P 500 delivers around 7 to 10% annual returns, while real estate averages 4 to 6%. But that's not the whole story. Real estate offers rental income on top of appreciation. A well-managed property can generate steady monthly cash flow while its value increases over time. Plus, real estate investors often use leverage, borrowing money through mortgages to control bigger assets with smaller upfront costs. That leverage can multiply returns in ways stocks can't. Stocks provide compounding growth without the headaches of property management. But if you include rental income, tax benefits, and leverage, real estate's total returns can rival or even beat stocks. 5. Passive income. Monthly cash flow versus dividends. When it comes to generating passive income, real estate often shines brighter. Rental properties provide monthly cash flow, which can cover expenses, pay off loans, and even create financial freedom if scaled correctly. Many investors retire early by living off rental income. Stocks can also pay you, but through dividends. While some companies offer decent payouts, most dividends are modest unless you invest heavily in dividend-focused portfolios. Still, dividend reinvestment can be powerful over time. 6. Taxes. Big differences. You should know taxes are one of the biggest areas where real estate has the edge. Property investors enjoy deductions for mortgage interest, depreciation, repairs, and even travel expenses related to property management. These tax benefits can significantly reduce your taxable income. Stocks don't offer the same perks. When you sell at a profit, you pay capital gains tax. Dividends are also taxable. The main advantage for stock investors comes from retirement accounts like IRAs and 401ks, which allow tax-free or tax-deferred growth. 7. Control. Active versus passive. 1. Major difference between the two is how much control you have. When you buy stocks, you're just a shareholder. You can't tell Apple how to run its business. You're along for the ride. With real estate, you have direct control. You can choose tenants, set rent prices, renovate, or refinance. Smart decisions can dramatically increase your property's value and income. Of course, this also means more responsibility, time, and effort. If you like being hands-on, real estate is a better match. If you want a set-it-and-forget-it approach, stocks are easier. 8. Diversification, spreading out. Diversification is one of the golden rules of investing. With stocks, it's easy. Buy a single index fund, and you instantly own shares of hundreds of companies across industries. Real estate diversification is harder. Buying multiple properties takes huge amounts of money. But in 2025, new platforms let you invest in pieces of properties across states or even countries, giving you real estate diversification without millions in capital. 9. Inflation protection. Who wins? Inflation eats away at money's value, but real estate often benefits from it. As prices rise, so do rents and property values. This makes real estate one of the strongest inflation hedges. Stocks can also keep up with inflation, especially companies that raise prices to maintain profits. But real estate offers more direct protection, since it turns inflation into higher cash flow. In 2025, with inflation still high in many regions, real estate is a strong defense. 10. Long-term wealth building. Which creates more millionaires? Here's the truth. Both real estate and stocks create millionaires. Stocks offer compounding growth, reinvested dividends, and global diversification. Real estate provides tangible assets, cash flow, leverage, and tax breaks. Most wealthy people don't choose one, they use both. They grow wealth through stocks and protect it with real estate. That balance creates stability, income, and growth across different market cycles. So real estate or stocks, which is better in 2025? The answer is, it depends. If you want liquidity, low entry costs, and compounding growth, stocks win. If you prefer stability, tax advantages, and monthly cash flow, real estate is your best bet. If you got value from this video, make sure to like, subscribe, and tap the bell icon so you never miss more money and investing tips. Your financial future starts with the decisions you make today, so choose wisely.